Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just going over some 4-hour charts, but just more importantly, going over establishing asymmetrical risk-reward opportunities, whether it's on an hourly chart, a 4-hour chart, a daily chart, a weekly chart, monthly chart. One of the biggest things I've learned from Peter Brandt, Schaubacher's material, is looking for the risk reward opportunities that are going to be in your favor. So a lot of times traders really spend the bulk of their time on entry and exit, the holy grail sort of situation, and less time on risk management. Their perception of risk management is establishing how much they're going to risk per trade, and oftentimes they don't often stick to those rules. But the biggest thing that's helped impact my trading in the last 12 months is really being able to identify these ranges. And Peter talks about this all the time. Charts themselves don't really inherently give you any predictability with price action. They do give you some opportunity to potentially forecast a range that a market may move to. It obviously gives you an edge to a degree to track historical price movement. But the important thing that I've gotten out of this is being able to look for these geometrical type patterns that can often give you an opportunity to enter the market with a well-defined risk and the reward area, which is 4 or 5, maybe 6 times to 1 or greater, depending on the opportunity. And last month, I mentioned that obviously one of my biggest months probably in trading came from 2 trades. Now, this last week wasn't the best in terms of results, but again, that's trading. And the one thing that I really love about looking and keeping trading simple is that I know that regardless of what comes in the future, this method will continue to give me high possibility reward to risk opportunity. So let's go ahead and just take a look. So we're looking at the pound yen, and one of the things I look at, this is the 4-hour chart. I've mentioned that I'm spending a lot more emphasis sort of on end of day trading, but I still use the 4-hour charts because the rollover time for the end of day, which is the 0 candle on the 4-hour charts, still again, when you understand these defining ranges, so these black dotted lines are the weekly separators, and we talk about opening range. Peter looks at weekly, monthly charts. We know that this year, most likely, we're going to see at least 1,000 pip move with the pound yen. Last year, we saw a breakout occur from a range at the beginning of the year. There's lots of different ways to look at this, and again, I'm only going over things that I use in my trading. It doesn't mean it's better. It doesn't mean anybody else's methods aren't the way to trade. I'm just looking at what works for me, and if it helps traders or gives them any tips that might help them improve their results, well, fantastic. So obviously, at the end of 2015, the market had established a range that it broke out of and had failed, and then came back into range towards the end of the year. The January of 2016, the market broke down, and we talk about the opening range and then the initial balance, and then from that point on, January held as the January effect for the year, and the market proceeded to fall. So you can see where traders can spend hours on 5-minute charts, hourly, everything else, and smart traders were positioned right off the bat, and people can talk about risk and everything else and how much, but you can still establish new positions inside of that breakout once it occurs, using daily charts, 4-hour charts, whatever. So, but again, just looking at opening range. So again, we're looking at the opening range with January. We have a high in place now just from December. The market has a slight breakout, bearish breakout, so we're just tentatively watching to see what price action unfolds from this point onwards. We still obviously have had a significant amount of selling over the last year and a half, but when we go down to the weekly charts, we can look at this and we can see that over the last few weeks the market has broken out 2 weeks ago and given us a new low that we can establish as a turning point. And again, so now we see prices within a range going down to the daily, and now we have December and January intact. But what's really interesting about the 4-hour charts is that, again, if we look at this as a the markets are open Monday to Friday, so essentially, again, we have 12 plus bars that we can establish a range with. And 2 weeks ago, the market proceeded to auction down before it had a breakout candle, which then allowed us to establish a range, a turning point low. The market then proceeded to trade sideways until the 12 o'clock candle, that would have been closing at 6 a.m. New York time, and then proceeded to break out strongly. So breakout traders, again, would position themselves. Now here's what's interesting. I talk about measuring the range. So obviously we had quite a bit of order flow, strong order flow in a bullish direction going into the end of the previous week prior to that. But what's fantastic is that traders can now take this range and project forward 2 times. So it reproduced that range within the next day, and then proceeded to attempt to do it did a full extension of that first range here. Then it proceeded to do that again, but then it failed around the 1.5 extension area. Now, interesting again, that failed towards the end of the week. So traders that held on to that to the end of the week were still able to either exit or move their stop up prior. Now again, not quite a turning point, but again a small rectangle that can be established at the beginning of last week. The market broke out strongly in that first 12 hours. Now traders would go chasing that, but we know that the market will always retest and fill a gap, which we see now. And again, if we were to take this high and this low and project that downwards, we'll just reverse this to get a measurement of the range. So we can now take this down to the previous level. And as you can see, if we get a full extension of that same range here on the pound yen, that would take us back to the old lows a couple of weeks ago. So now the key thing with this obviously is to watch how the beginning of next week opens up. So we've got a bottom of a range, we have a turning point. So the market is auctioned down, broke out, auctioned back up, filled the gap from the original breakout at the beginning of the week, and then came down heavily and then auctioned down south after payrolls. So again, we proceed into the beginning of next week, and we'll watch to see perhaps at this point, we don't really have a turning point there, but we do have a level where the market rejected and came down. So we'll watch to see what happens. Now, again, just going backwards, the end of the week, even looking at weekly highs, weekly lows. Okay, so we had a range that the market auctioned up into, and again, if we were to just project these ranges, the market did a two times extension of that range. So breakout traders, aggressive traders obviously may have entered in off of the initial balance. Breakout traders were able to position themselves down here. And remember the primary premise with trading. Price is always trying to break out. It will retest, it will fill more orders, and a continuation will happen. Or number 2, it will break, it'll retest, it will fill to hold and reverse, which we'll show an example of that as well. So if we go up to the top here, we see that price breaks through a range, fails to hold, okay, auctions back down, breaks through the range but doesn't close outside of the range again. So again, we would call this a false break, which is number 3. Price breaks, retests, fails, and goes into it breaks, fails to hold and reverses, and we would call this a marginal new high or a false break. And then of course our last example, price breaks, it retests. Okay, it fails, goes into a trading range before it eventually breaks out again. And does if you notice, when it does break out, when we open this up to the new turning point, we get a range extension. So again, just looking for these rectangular geometric patterns. They're not always going to be like this, but the great thing about the 4-hour charts, really simple thing that I like to look at, we'll just randomly scroll back here. Even if you look at the previous week's high and the previous week's low, again, it gives you some idea perhaps of where price will either have a false break and reverse, and again, the time of day is critical. So the market breaks out into the Asia close, London open, and then reverses during the session, comes down during the US session, and then overnight into the rollover, continues to auction down. Okay, and then again into the Asia close, London open, boom, we see a big move. So start drawing these lines. These are some fantastic opportunities. Again, even if you're just looking for geometric ranges and looking for markets that are range bound. So we talk about, actually we'll just put up a Monday. So we can see here, again, the red bar would be a Monday, the beginning of the Monday. So this is a great example right here. Really big, huge, volatile candle. And if you watch this closely, we don't see the market actually pull back as a breakout candle with a bullish candle until down here. So we can then draw our top there. The market has given us very, very limited opportunity to buy range until the following week. So this is a great example of where you can avoid the market as well. So consolidate these price charts, start using your previous week highs and lows. Okay, look for these range extensions, false breaks when these markets do break out. So as we can see, market will retest. Okay, so we got an example of where there's a gap open on a Monday, so it's opened out of balance, out of range. Okay, the market then proceeded to pull back and retest that breakout. Goes into the high off the opening gap, goes into the London open towards the US session, and then eventually during the US close, Asia open, again the market retests and fills that range again before aggressively coming back. And that was actually the election day. So that was quite a volatile situation when Trump, the election results showed Trump being elected. But again, what's great about the 4-hour charts is even if you're looking at end of day, the rollover time at 0 hours, 0 hour, is a great time to check your charts to see, again, number one, if we've put the previous week's high in there, and during the week you're able to establish at some point a low. So we've got a low that's set in during Monday. So when we roll into this rollover time frame, so we've got our 0 candle here. Okay, so at this point, no trade. We follow this over, candle breaks out during the US session. Okay, our rollover session is here. Now, if you were on your US Open, or the Asia Open on the rollover here, number one, if your system was generating a long signal, you would be able to identify anything inside of the range of this breakout candle as tradable, and your stop, as you can see, would be below this one candle. Now people have asked me, say, isn't that too big of a risk? Well, your risk is always going to be defined by you, and if you're only risking a certain percent on every trade, then every trade is just another trade. Now, depending on how you're accessible during the day to take these trades, you may trade that a little bit differently. But one of the things to remember is that when you have a breakout that occurs out of a range like this, you want to be able to project at a minimum where that market may head to. So in this particular case, a full extension of that range continued, and then again, as we said, it did a 1.5, just a little bit beyond a 1.5 extension of that range extension. So, in this particular case, depending on where you defined your stop, and how you position yourself in that trade would have returned probably at least 2 times your risk. And if you had a smaller opportunity to a tighter stop to enter in on a smaller time frame or something, that would have been entirely up to you how to trade that. But again, these opportunities, again, like Peter trades on the daily and weekly charts, and one of the reasons is that when these markets move, when you're able to position yourself on a break of a range, some of these trades can obviously return a fairly significant opportunity in terms of range projections. So take a step back, take a look at your ranges, make sure you define the risk reward in those cases, and try to skew them in your favor to where you're looking at least 2 to 1. And when you get a chance to position yourself into these big moves, they can return some real home runs. So stay disciplined, stay focused, take a look at these longer term charts and look at these breakout patterns, traders. There's some real great opportunities for you to improve your trading. Have a great trading week, traders, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.